start recording. Um, so obviously it's been a great week for bullish price action, which is what we anticipated. Um, I was looking for this on Ethereum, fucking 3031, hit 3048 and just rocketed. So that's all G's. Right now I'm looking for a so let's look at the daily first on Bitcoin, just so you guys can get a bit of a gist for. Oh, nice. How the fuck do you say your name? Is it Rab Beat or Rob Beat or some shit? Um, yeah, I've actually just finished work, so um, just wait for you to finish typing before I start getting into it. I'll take some chart requests tonight as well. We'll just quickly go over bias and yes, you can pronounce it rabbit. Okay, cool. Yeah, rabbits. Bro, I'm so profitable with paper trading. Yeah, I feel like you can be quite profitable with paper trading because it takes away the emotional side, right? You're not second guessing. Yeah, exactly. Um, so that's kind of obviously how you want to get with trading live funds as well. It's not easy, but I feel like a lot of that fear comes from fear of the unknown. So if you either don't have a sound risk management plan or you're still trying to understand concepts in a system that works for you, or you're just jumping into trades without any real plan or real defined opinion on where price could go, that could be where an area that you need to work on. So um, and I think that'll take away a lot of the fear. I definitely I definitely don't trade with fear anymore. I did for a long time, but yeah, once you once you kind of form a plan and trade models in price action that work for you, and um, you know you should never really be taking a hit on your account that hurts, and the reward for the winning trades is much greater than the risk that you've placed even on your losing trades. So um, but yeah, we'll get into Bitcoin specifically with our bias. So um, for the week, obviously, I'm quite bullish. I think we do. Price is it's quite apparent that the price could be reaching for previous highs, aka buy side liquidity. So um, we definitely saw a bit of a. I'll just mark them out so you can visualize what I'm looking at. We obviously saw a bit of a. Yeah, no worries. I'll do Sol. We'll just quickly go over bias. So obviously, once we swept this consolidation range low, we saw a nice reversal followed by the order block retest. I wasn't convinced by the initial retest. As you can see, we formed a doji and nothing special out of yeah, you haven't missed out on the bull run, mate. Don't stress. And regardless, bull market, bear market, if you're a leverage trader, there's always trades to make. So don't worry about FOMO. If it makes you feel any better, I missed the move from 3,000 to 3,700 by $15. So it's gonna happen. It's just part of trading. Um, so we've swept into sell side, right, of this consolidation range. See, what we're seeing right now is the model I like to bang on about. You guys know me. So we saw the accumulation followed by manipulation and move to the upside, right? So AMD model, um, Power 3, whatever you want to call it. It's all the same shit. So once we hit sell side, we've definitely begun a a bullish order flow leg. So this is definitely a buy program. You saw the breaker structure, broke, retest, straight back up. Um, Obviously we've got the fair value gap below. So heading into the 4 hour. So if we see this consolidation range, right, we've swept sell side. So where is price likely to draw to now? Now that we also have a confirmed power of three model buy side, right? So I'm not really concerned about what price is doing here. I don't see us retracing from here. I see either a sweep of the high at 72,850 and potential displacement, or the sweep to previous all-time high followed by retracement, or simply, obviously, a market structure shift. But the only time I'm considering a bearish bias is if we see a displacement move once we sweep any of these significant highs, because obviously that's the external range high. That's an internal range high of the daily range. So we're obviously trading at a premium, but that's I'm not concerned about that right now, as I think we do take buy side, like this is indicative that buy side should be swept before a potential retracement. So keep your bias bullish, but definitely consider if we do see an energetic move to the downside once some buy side liquidity is swept, definitely consider shifting your bias. So throughout this entire leg, we see the daily order block after sell side was swept. Um, you can see throughout this entire leg that we've got simple accumulation, manipulation, distribution moves. So you've got sell side was swept through here into the order block, continuation. This is a market maker buy model. So now you've got consolidation, sell side sweep, continuation, consolidation, sell side sweep, continuation. To get in on the trend, I'm now pulling fibs from the recent trend, right? This is the recent trend, and we're aiming for the external range highs. So we're aiming for the daily highs at 72,850 and 70, what was it? 70, yeah, 73,850. So previous all-time high and the internal range high would be the target. But we're now trying to get in on the trend, right? So I would be pulling fibs from the low that swept this range of sell side. We can look at OTE, our OTE range. You can see range equilibrium lines up really well with the initial fair value gap retest. So there's a little bit of confluence there that we could see a retest here before potential continuation, as it's below range equilibrium, right? We look to be buyers at a discount of the range. And then we've obviously got the breaker block that formed that swept sell side before continuation and displacement. So these all line up with the optimal trade entry range. So I'm actually going to be looking for. You can see the 0.62, which is our initial optimal entry range. Optimal entry in the fib range is sitting at range the fair value gap equilibrium, which is 50% of the fair value gap, obviously. So I'm actually going to set this alert. I'll obviously wait till the end of the stream instead of wasting time typing it out now. But this is the higher probability entry point for swing traders. So I'll be looking to get in here, and ultimately we'll be targeting the highs, internal range high and the previous all-time high. So yeah, this is the higher probability sort of entry range you want to be considering, because it's the buy program, right? Where unless we see a buy side sweep, so unless we consolidate here, we could consolidate in this range, sweep this high, and see a bit of an internal range displacement. So we could see something like that. which we obviously don't want, but we could see something like that. So you could see this high swept followed by displacement that breaks bullish order structure. Um, but I'm anticipating the buy side sweep before we see any form of displacement. So you always want to be thinking where's liquidity, where's price likely going to be drawn to, um, which which area in liquidity is most likely to be swept next. Sell side of this range has been swept, so what's next? Buy side, right? Um, and then yeah, we'll see how price reacts from these highs. We might see a sweep here followed by displacement, and then I would consider flipping my bias short and looking for a high probability short setup. So you might see consolidation, sweep, continuation of the downside, right? So yeah, bias is bullish right now. Um, Simply looking for retracement moves into continuation. Um, so we'll have a look at Sol now that we have our bias. Um, oh, we got fucking drawings everywhere. Let's have a look at what I was even looking at. I think yeah, I was looking at an initial entry on Sol. It just ran. So we got the market structure shift and a retest. Uh, Retested this fair value gap and just took off. I was looking for a deeper retracement, obviously, into a range discount, but it is what it is. So let's remove everything to start off clean. Yeah, so same thing. If Bitcoin's reaching for highs, obviously we're anticipating highs to be grabbed on the buy side for every other coin too. So we saw the sell side sweep here. Consolidation, manipulation, continuation, right? Personally, so we got the market structure shift there. That was the equal highs that we were targeting in the long setup. Um, so we got the market structure shift there. I would be looking for a retracement, obviously, into. You could look for a retracement into this area. So same thing again. We got the consolidation, sell side sweep. I would be pulling fibs from here to here. You can see it lines up quite nicely with the internal range market structure shift. And obviously we want to be buyers at a range discount, so I'd be looking at 174.83, 172.88 and 170.94 as entries, and I would keep stop loss quite tight at 166.13. So if you did want a long setup on Sol, that's what I would be looking at for a high probability swing setup. If you pulled from here to here, you can see we're actually within a range discount on the hourly. 180.63, 179.45, 178.26 would be the entry points. But yeah, I'd be looking for the higher time frame entries right now, as we've made quite a large move up. So we could see short-term retracement, obviously. Those equal lows look decent, and that would coincide with our entry points on higher time frame, right? So we could see just simple, oops, we could simply just see, you know, moves like this down into our entry points, sweep into the external range points of interest, and then trend shift, right? The ultimate goal, would be looking for buy side. So I'd be waiting for, retracement into the 4-hour discount range, the 4-hour, range discount before continuation. We made a sizable move up today, so it's not just going to continue up only. We're going to see some form of retracement at some point, right? That's how the markets roll. So hopefully that answered your question for Sol, or your curiosity for a Sol setup. Yeah, no worries. That's probably the higher probability sort of setup. Is there anything else anyone wants me to look at? Bonk. You guys love all the fucking love all the memes, don't ya? I don't even think I have Bonk on my watch list. I probably should add it to my watch list. Um, yeah, this was the short point of interest for me for Whiff. I'm gonna remove everything anyway, but we'll head to Bonk. Might add it to my, what the fuck's that? Premium index. We don't want that. Yeah, that'll do. I'll add that to my watch list actually. I need to refine my watch list a bit. I've got some coins that just aren't movers anymore. Yeah, life is a meme, right? um, equal highs were grabbed here, right? So it's definitely what you could consider a market structure shift. You definitely, um, nice bullish order block retest before continuation. I'd pull your fibs from the low that went into the order block before. Weekly selling finally stopped for Bonk. Yeah, interesting. So, um, personally, these would be my sort of entry points. You've got the inverse fair value gap here, which lines up with fair value in between two of the OTE ranges. So I would definitely be looking at a retracement into that area before potential continuation. If you were greedy or impatient, you could look at an entry there as its range discount, right? So we've got confirmed bullish order flow. So you can see order block down here was retested, continuation. Order block here was retested, continuation. So we're definitely seeing bullish order flow within this price leg. So and this displacement move is definitely indicative that we could be looking for further buy side, right? They would obviously all be yes, sweet bro. We'll have a look at Pepe. They're all areas I'd be looking to scale out, obviously. But yeah, if you were looking for a long setup, I'd simply be waiting for at least 0.028344, and you could look for some sort of swing entry from there. 0.032625 would be the high target. So we're not looking to be buyers in a premium, right? Even the recent display. So this is a confirmed trend. What did we have here? Consolidation, consolidation, sell side sweep. Do you see like how this shit actually happens everywhere? So this is a confirmed trend, right? This is the confirmed trend. So, oh, I'm just saying goodnight to my son. I'll be 2 seconds. Right, back. Um, so yeah, we're simply just waiting for range discount to be buyers, and obviously we're in an internal range premium. We could see a retracement, especially after the price action today. So you've got some added confluence for bonk as well with the trading above the 200 MA. But yeah, obviously my stop loss would be at the sell side that came into the order block. So 0.024373 would be the stop loss. You could obviously I'd probably just round that up to 0.0243. Um, but yeah, so that's bonk. Um, not looking for longs right now. Obviously, we can trade intraday price action, but we've the move was already made, right? We're simply over the next day or however many days throughout the rest of the week. We're simply waiting to see whether price action presents us with potential entries. So um, it's definitely set limits at range discounts from these displacement moves. So what I bang on about all the time. Once we see this defined trend, so we see engineered liquidity swept, followed by confirmed trend, that's when we're looking for our entries, right? So we might have a fair value gap there, order block down here. You know, if we pulled our fibs from this while we use OTE from the low to the high of the displacement move, we're looking at the range discount. You know, you might have a fair value gap line up with the OTE range, and then we're looking for the sell side sweep into range discount followed by continuation. So this is what you want to be waiting for. You're not simply jumping in on this momentum. You can, but the probability of it playing out in your favor is essentially 50-50 because this is no structure to play. You can scalp, by all means scalp, but we're looking right now for the higher probability setups, um, and this model is what we're seeing right now. So that's what we saw. We're now seeing the consolidation leg after displacement. We're simply waiting for another sell side sweep into range discount, HTF followed by continuation, and that's going to be coming up on every altcoin. We've made moves, substantial moves to the upside. We're now waiting for retracement. We're now waiting for price to present us with high probability setups again. I might actually take a look at some stuff afterward. I was looking for a short on Gala, trying to play the news event. Obviously, we had a buy side sweep here, followed by displacement. I love to play these setups, so we kind of just missed this here, but that's fine. I actually exited the orders because I'd rather be awake to manage it, and it's bedtime soon. So we'll head to Pepe. Wherever the fuck it is. I don't have my glasses on right now. Oh, here we go. Yeah, so interesting. Um, Definitely could have held our long setup that I had, but you can see the market structure shift retests. We've now got relative equal highs here. I would be same thing using optimal trade entry. If you see these areas, remember when I said when you see a fair value gap, look to your left, and if you see an inverse that lines up with that fair value gap, it usually indicates a potential point of interest. You do usually see price kind of gravitate to these areas. That range discount lines up with 0.62. So personally, that's what I would be looking for before continuation to sweep buy side. So um, we're obviously at an all-time high right now. Um, FEG, yeah, FEG plus 6.2 definitely a good combo. But it's also I want to see the AMD or Power of 3 model kind of play out to support fair value gap. So we might have fair value gaps within a consolidation range, right? All this engineered liquidity. I'll tell you how we determine an FVG in a second. It's quite easy. So um, we might have this leg of engineered liquidity um, that has fair value gaps within it, and a lot of people that do use fair value gaps, they're simply just using every fair value gap and thinking they're all um, important, but they're not. So um, we might have a fair value gap within the sell side sweep and then displacement. So you might have fair value gaps within this consolidation range that have been mitigated and just completely violated. So what I'm waiting for is this sort of pattern inverse for short, right? So you might have fair value gaps within the consolidation range, and then they're both violated, and then the displacement legs followed by. So displacement's just the energetic move, right? So you might have a fair value gap here, right? And then if we pulled our OTE low to high, you can see that 0.62 lines up with the hypothetical fair value gap equilibrium. This to me is a high probability fair value gap because we've seen manipulation on both ends. Consolidation's been knocked out. Both ends, resistance support, or what people consider resistance and support, has been swept out of the market, and then we're looking for a retracement back up and continuation to the downside. So you want to see fair value, like I'll show you where fair value gaps aren't important. So so you've got fair value gaps all through here, right? But that's a consolidation range. So if we zoomed out, this range here is consolidation. You can see this fair value gap here was mitigated, but we had no reaction from outside that fair value gap to the up. We had no real reaction to take this high from within that fair value gap, right? We just simply consolidated. What we saw here, the actual context was, you can probably see it already if you know your power of 3. What we saw was what? Accumulation, manipulation, distribution, right? And then what did we see once price? So this is the confirmed trend shift. Consolidation, manipulation, distribution. Here again, useless fair value gap because we're simply consolidating now. Consolidation. We mitigated it. There was nothing. But now from within this consolidation range, we see a large displacement. which was respected. And why it was respected is because after the power of three, so after the confirmed trend shift, the high that was formed, so that this high that was formed, we saw a displacement move run through that. So that's another market structure shift, right? After after price showed a willingness to continue to the upside. So this is a significant fair value gap, and this is also a significant fair value gap because we formed relative equal highs from this recent move up. What do we have here? Accumulation, manipulation, distribution, relative equal highs. You've got an inverse fair value gap, followed by a sizable fair value gap. So when you're looking at a fair value gap, you want to be looking to your left as well. And if you see an inverse fair value gap, that's a high probability area that we could see price gravitate towards. So we might see, something like this, and then go for the high. Go for this range high. Hope that makes a little bit of sense. But yeah, so how do we determine fair value gaps? We'll get rid of. So you see this energetic move, right? You see this candle's body from this wick to the wick below. This body is a fair value gap. Right, everything seems so simple. It's simple once you understand what you're looking at, right? I don't claim to be any master. I'm still refining and sharpening my tool set myself. I still watch videos. I still study price action. Um, but once you know what you're looking for, and once you've seen it be respected in front of your own eyes on a chart, that's when you'll start learning the most. Um, so do you see how to find a fair value gap? So any of these energetic moves where there's a gap essentially between wicks. Cool. Right, no worries. But yeah, so I'd be waiting for a big candela. Yeah, yeah, it is. I really like that inverse there. I really like that inverse. That's what I'd be waiting for Pepe, for a high probability setup into the trend, right? Is there anything else anyone wants me to look at? No. So you might see it's a set. Well, I guess so because this could just be one daily fair value gap. So that's 8 hours of price action, right? Two 4 hour candles is, yep. So it's just the daily fair value gap. So it's just depending on what time frame you're on. So the daily fair value gap is obviously both of these candles, and then if we go down to the 1 hour, it's it doesn't even show us a fair value gap. That's three candles. It's going to look different based on what time frame you're on. Um, but yeah, so that's why, say if we go to a 5 minute chart, we'll get a Bitcoin for an example. Um, you can see here. So we had a willingness for price to continue to the downside, right? We've you can see a breaker block here was retested. Internal range buy side liquidity was swept, and then we've made a substantial move to the downside. So you're looking for displacement moves. So displacement is fair value as a potential entry point. So that could have been your entry point to get in short, and then you're targeting, this is a scalp example, then you're targeting previous lows, right? And you're targeting sell side liquidity. That would be your targets for the short. And this can be high leverage. Sup, Nick? Yeah, we can take a look at Jasmine. Yeah, so Ransu, it's not actually three consecutive candles that has a big gap in the middle. That's not a fair value gap. So um, but you might have a quite a large range of fair value from within from two to like right. That's essentially two candles of fair value. But I would be using that and also considering the inverse. That would be the fair value I'd be keen on personally for Pepe. And the 0.62 lines up really nicely with that retest. So I'm actually going to be as I just said, so you want to be you want to see a manipulation move, right? So as I was saying before, we could have this consolidation range with a bunch of fair value gaps inside of it, but we want to see a manipulation move followed by a displacement move. This is the confirmed trend. Fair value gap obviously forms in the displacement move. We're then in another consolidation leg. And what are we looking for here? We're looking for pull fibs. You might have, so this range is significant, right? Any fair value gap that is formed within this range, that is broken out of a consolidation range, would be considered significant. If it's at a range discount, it makes it significant. Because what do we look to be at a range discount? Buyers. But inverse for shorts. What do we look to be at a range premium? Sellers. But this is the defined range. This is, or defined trend. This is the defined trend. This is showing you that price is making a willingness to head up. So then we're simply waiting for a tap into range discount. You might have a fair value gap there. That's what makes it high probability in my opinion. If you see a fair value gap at range discount and it lines up with a breaker block and order flow, that's what increases its significance in my opinion. You could see you could see 50 fair value gaps within this consolidation range, and they don't. You can trade them, but they don't really mean shit. The significant ones are the ones after you see a displacement move. This is energy. This is big money coming in. If you see a fair value gap form at a discount, the manipulation is for institutions to get in lower before it reverses and starts an uptrend. Is that right? So the manipulation, yeah. So essentially, they're sweeping everyone out of the market. So what they're doing, Nick, is you'll see consolidation ranges form. And this is where everyone's like, oh, the fucking market's boring, like, you know, and it's a scalper's dream, but you see lots of people say the market's boring. But what's going on here is built up liquidity is forming within this range. So you've got a bunch of liquidity building up in this range. And what is happening is institutions they want people to build liquidity up within this range because that's liquidity for them to sweep and take. So liquidity is being built up within this consolidation range. Everyone's bored shitless. No one's making any money, or scalpers are making really good money. But stop losses are always where do people set their stop losses? Can anyone tell me where most people set their stop losses? Yep, exactly right. So what is considered support and resistance? Double bottoms, double tops, equal highs, equal lows, swing highs, swing lows, where price bounces off. It doesn't actually exist. Support and resistance is bullshit. So um, what price is simply doing is institutions are allowing liquidity to be engineered within this defined range and stop losses to be built up, which are what pools in liquidity, right? That's liquidity is going to be resting at the highs and resting at the lows, and then you see these expansion moves. So after accumulation is manipulation. So then in this example, obviously this is a bullish example. So then support, or what people define as support, is swept. Stop losses are swept out. Um, bullish consolidation range traders are swept out. And then you see a displacement move. Oh shit. And then you see a displacement move. I'm going to try and save this. Give me 2 seconds. Oh, you motherfucker. Okay, we're good. Okay, and then you see a displacement move to the upside. Everyone's been knocked out of this market from within this engineered liquidity range. Liquidity's been soaked up. All that liquidity has been soaked up by institutions, and they're now driving price in the direction that they want it to, and no one's making any money. We're waiting for this pattern to form because this is showing us that this is a defined trend. That's not a defined trend, it's consolidation. So engineered liquidity equals institutions micro buying, micro selling to keep it within that range. Not necessarily, it's just that retail is not moving price, right? So retail traders are buying and selling within that range. So me, you, anyone you know, we're not the ones moving price. Any of the big displacement moves is from no, it can't. It's when you hear people talking about buyers buyers are stepping in and all this shit, but you might see someone will say that from within this consolidation range, and it'll hit the double bottom or the fucking triple bottom or whatever you want to call it, and then you see a move up to the top of the engineered liquidity consolidation range. You hear people say, "Oh, buyers are stepping in," and then it'll hit resistance again, and it's like, "Oh, fucking bears are stepping in." You hear this shit for weeks and days, or etc. And then you see these moves, everyone goes quiet, and then you see the moves to the upside. And if people were on the right side, that's awesome and great. And then you hear people going crazy, but a lot of the time, the people that are trading within this range and simply not being patient and waiting for a defined trend to form are the ones that are getting wrecked over and over. Yeah, awesome, Nick, man. I'm glad you understand, bro. Let's have a look. Yeah, well, exactly right. You can see it throughout. Yeah, every every time frame. So here, our consolidation range, and then we had a strong move to the down. What would be the move on FTM? Let's have a look. But yeah, hopefully you guys understood the engineered liquidity concept I was just talking about because yeah, it's Happens all the fucking time. um, BD, sorry, I'm losing track of comments. Give me 2 seconds. Does it need to be a wick to be a sweep, or it just needs to show a displacement move? So what are you asking by that? So are you asking, does there need to be? Are you asking whether if it hits above buy side and simply wicks and then doesn't show a displacement move, whether it could be low chance of it working? Yeah. So you do want to see displacement after a sweep to confirm a potential trend shift, right? So the trend shift would be if we broke this low with energy. That's the recent because that's the recent leg that swept buy side liquidity. It would simply just be a market structure shift if it swept to high and continued, right? Which is what we're anticipating now. Because we've obviously seen significant highs being swept. So these equal highs were swept, we retested, continued. So we're not seeing any displacement to indicate that price is bearish. We saw a buy side sweep here, but there's no displacement. And that's the recent bullish order block, right? So if we swept below this with energy, you would look to get in there and continue down. But we're not seeing anything to indicate that. We're simply looking for long setups right now because it's the trends where the trend is defined for us right now. It's we're not in consolidation leg. We know exactly what we're looking for. We're looking for long setups. We're looking for retracements into continuation. So from here, so say you're in long from the initial retest of the market structure shift, and we took out a significant high, which is either an external range high, a high before a significant move to the downside. If we took any sort of high buy side liquidity with significance that is significant and made a displacement move to the downside, that's telling us that price is simply reversing from there. So it's telling us that institutions or buyers were interested in taking profits at that price target, and that's when you see the strong moves to the downside is when big boys are simply taking profits. So then what do we do? This is showing reversal. So you're seeing sell side sweeps in a buy program, sell side sweeps in a buy program, and then you're seeing buy side sweeps in a sell program. So we could see the buy side sweep followed by displacement, consolidation, buy side sweep before further displacement. Buy side sweep into what? We'd pull our fibs from the high to the low before the consolidation move into premium. So you see here we would be looking for premium. You might have the fair value gap. You might have a bearish order block within optimal trade entry range on the fibs. And look for an initial into there. And continuation to the downside because we're now getting into the sell program. Buy model's been exhausted. People are taking profits at a significant high. Does that make sense? Market structure is probably the most important thing to get your head around. And liquidity structure. So definitely just always have that in mind. Where's price most likely to draw to next? It's always chasing liquidity. So you would enter once it's gone below the engineered liquidity because that would be a confirmation rather than entering when you see the displacement. See, I would enter after I saw the after I would be entering here. So what I'm looking for, we see the consolidation, the sweep, displacement. I'm looking for this to form before I look for a setup.
Mm.
So then I'm then looking for this is the beginning of a buy program, right? We're seeing a willingness. You might have got this consolidation range, and this might be a significant low down here. This might be an external range low. This might be a fucking, a daily low that hasn't been swept of a defined range. So this could be, for example, if this was a 3 months worth of price action in a consolidation range, and you saw a low get swept. So the support that everyone talks about, but that's 3 months worth of built up liquidity swept, and then you see an energetic move to the upside. That's telling you that your buyers should be bullish for the week or for the day or for however long, and then you should be looking for long setups. So then I'm looking for consolidation again, retracement, continuation, fair value gap at discount, or bullish order block at discount. Any of these sort of concepts that are at a discount of the range before continuation. Displacement displacement is just about everything and anything that matters. Um, wow, you're lost. That's okay, man. That's you can feel lost. Um, obviously, I'm not trying to. This wasn't meant to be an educational piece. I'm kind of just talking off the top of my head. So I am thinking about doing a 4 or 5 video series on SMC concepts and something more structured. So I'll uh, I'll have notes rather than talking off the top of my head. I've worked all day and I'm quite tired, and my brain's probably fucking had enough for the day. Um, but yeah, it's okay to feel lost. I'm trying to explain it in a simple way because the concepts they're not simple concepts, right? It's if they were simple, everyone would be doing it, everyone would be winning. Um, but true understanding of concepts is being able to simplify them, right? So that's definitely something I'm trying to work on. Yeah, no, that's fine, man. We've all been new at one point. These were concepts that I stumbled upon, I think, 3 years into my trading. So um, yeah, just you can hit me up anytime. DM me directly. Can you do a quick explanation on where to pull fibs from? Um, So we're pulling fibs from displacement moves to find trends, right? So, mate, you should do more of this trying to grasp, but it's helpful stuff. Yeah, no, I appreciate it, man. That's exactly why I do it. I'm doing it to hopefully. I want a community filled with gun traders, man. I want a community filled with quality traders that we can all bounce ideas off. And I'm not a big fan of the vulture kind of copy trading fucking narrative. So um, I'm kind of trying to push. I'm trying to push people to become more self-sufficient traders because I feel like you're gonna be making a lot more money and it's gonna be a lot more satisfying if you can perform trading plans yourself and execute them correctly. So from the top of FVG for long and from the bottom of FVG from short. No, so what you want to be looking for to pull fibs, we'll go to a daily because it's probably easier to see. So what you're looking, oh, we'll go to an hourly actually, it's probably easier. So what you're looking for is a defined trend. So I'm not looking to pull fibs from here to here, you know, or for like we're looking for displacement, so we're looking for energy, and then you're only what I'm only using OTE fibs to try and define where the discount of the range is that I'm trying to frame a trade within, and try and just it's just a visual tool for finding entries. You don't need to use OTE fibs to find entries. Obviously, what I'm telling you here is you could simply like so I actually have I'll go to the 4 hour, it might be easier to so from this low to this high is a defined range, right? Because from this low to this high, we have an energetic move. This is a defined trend. So we had the consolidation, the sell side sweep, continuation, sell side sweep into a bullish order block, and continuation, right? So what we're looking for using fibs is entry points, and you might see some confluence. So here, what do we see here? I'm not going to answer the question. I want one of you guys to answer. Exactly right. So what else can you see? Where is it? Where is the displacement? No, so it's yes, it's after sell side sweep. That is correct, and that's definitely something that is important. But it's at a range discount, right? So we've got a fair value gap at the defined range discount of the range we're trying to frame a setup within to get in on the trend. And what else do you see? So the 0.62, which is our initial optimal trade entry fib, lines up with fair value gap equilibrium, right? Which is 50% of the fair value gap, which is added confluence. Is discount below 0.5 fib? Yes, exactly right. And that's exactly why I use it. I actually have I have different saved templates for fibs. So I have an EQ. Um, yeah, exactly right. So that's potential confluence. It's at a range discount. It lines up with two of our optimal trade entry on the fibs. Can you share in the chat your different fibbo settings? Yeah, no worries, mate. Oh, cool. I'll just put them up. That's what I use. So for optimal trade entry, I'm using the zero point 0.5, the 0.62, 0.79, and 0.705. 0.62, 0.705, and 0.79 are the optimal trade entries within a defined range. I'm going to show you further confluences as well. So what's this? It's a breaker block. Lines up with optimal trade entry range as well, right? So we've got three confluences within this range. Break of structure is the same. So it's not. So break of structure is so what I was telling you about. You've got your engineered liquidity. This is your defined structure, right? Shit. This is your defined structure, right? What happens once we sweep? It's a break of structure, right? So here, I'm not looking for a breaker block unless there's been manipulation first. So if we simply dribble down here without sweeping buy side, this isn't a valid breaker block to me. Do you know what a breaker block is? Okay, so a breaker block is a previous bullish or bearish order block. Let's try and find an example. I'm just trying to find yeah. So this is a decent example. So this was a bullish order block, right? So a bullish order block is a down close candle before an energetic move to the upside. So down close candle, energetic move to the upside, retracement, down close candle into, what do you know, a fair value gap before continuation. So this is telling us there's bullish order flow. So this is a bullish structure, right? We then, if we look to our left, what did we do? Swept buy side, rejected off the 200 MA, and once we swept buy side, we tapped into a significant bearish order block, which is an up close candle before an energetic move to the downside, which was untested. So this whole leg here is simply distribution. What we're seeing here, and you've also got equal lows here that would have been built up liquidity. So what you could have done, so let's go all the way back here, because this is the external range. This is what's, look, you can see here is where we started seeing a willingness for price to go down. So then we're looking for, see, look at the reversal after taking those equal lows. But anyway, let's go back here. So what did we do here? Exactly right. Buy side sweep, and it's confirmed buy side sweep because what happened here? I'll get rid of the MA because it's annoying the hell out of me. So what happened after the buy side sweep? We got an energetic move to the downside, which is what? A willingness, which is showing us that price is now, big buyers have taken profits at this high and are now selling off. So after the buy side sweep here, what formed here? That's a bearish order block. So it's a significant up close candle. So it's got a large body. We see a willingness for price to continue down. We see what? A break of bullish price structure. So this is a break of, oh, what the hell just happened? So we saw a break of bullish price structure here. This was bullish price structure, right? Because it took the buy. This is the order flow that took this buy side. So once this is telling us the price is now wanting to reverse. So we tap the bearish order block and make another energetic move to the downside. And then what's this? That's a bearish breaker block, which lines up with a fair value gap. So it's added confluence that this breaker block is significant because it lines up with the fair value gap. So your re-entry could have been into the fair value gap and into this bearish breaker. So then we formed equal lows here. We've now consolidated. We're simply waiting to get in on the trend. So we could have looked to get in at this bearish order block. I'll get rid of the other crap. So a bearish order block. Can you see what a bearish order block is? So it's an up close candle before this would also be defined as a bearish order block. It probably is on the daily. It's probably just one candle. No, so it doesn't have to be just one candle tall because it's different time frames, right? This is a 4 hour, so this might be. Let's see how it looks on the daily. Where the fuck are we? What's going on? Oh, cool. Yeah, so it's a wick on the daily. So a wick is also considered a rejection block, but so the 4 hour, it could be considered a cluster of up close candles. But what you're looking for is an up close candle or a cluster of up close candles before a displacement move to confirm it, to confirm a bearish order block. A bullish order block is a down close candle before a displacement move. So you can see one here, right? Down close candle, move to the upside. You can see here, price retested it, and then we swept buy side into a bearish order block with the distinction that price wants to keep coming down. So we're not bullish here. I'm not looking for longs here. Even though price is respecting bullish order flow within this leg, it's simply consolidating within this external range. And this is telling us that price wants to make a move to the downside. How do you know how tall an order block is? For example, why aren't the two candles to the left of the order block included? No, dude, I want you to ask questions. That's awesome. So they don't have much. There's not many bodies, right? So you want to look at areas with large amounts of body. So you could include those two up close candles because there's quite a large amount of body within that candle. You've got a fair value gap within there. This is a valid order block. That's a valid order block because there's decent amount of body there before a displacement move. You see an up close candle here, but that's not an order block because there's no real energetic move there. You've actually simply just got a fractal accumulation accumulation manipulation distribution move. It's probably not going to be easy to find on the 15 minutes. I'll skip that, but um, yeah, you don't want to be using, you can use dojis and wicks and shit like that, but the main thing is that you're looking for an up close candle and you want to see confirmed displacement from this pocket. Yeah, cool. I'm glad. So knowing that price is has a willingness to continue down, we're then looking. This is a high probability area that price could continue down, and this is a potential entry point. Yeah, so you can determine them only after the move. That's that's uh, that's confirmation, right? I'm never ever chasing momentum. I'm never trying to guess what price might do. People that do that they may as well grab a crystal ball and act like psychics or read tarot or some shit. But it's you're playing 50-50 if you're trying to guess what price is going to do. You want to see confirmation on what price is willing to do and what price is more willing is what price is more probable to be reaching for. So if you see the context here, buy side was swept, move to the downside. You can see bearish order flow playing out. You see this consolidation range and a move up, followed by a buy side sweep into this bearish order block. Made a displacement move. What did we have here? Even if you just waited, you didn't even get in at this order block. We see a further confirmation for price to continue down. Let's get rid of all this crap. So you see this. Your bias is bearish because it's a confirmed. You see the buy side sweep followed by energetic move to the downside. You know that price is wanting to make a move down and sell off. There's no displacement move to the upside. There's no trend shift. We're simply distributing. You see this. So you see a buy side sweep within the internal range followed by what? What can you see here? What can you see after the buy side sweep? Yep. What does it form? It forms a fair value gap. I love trading these models because they're quite high probability. If you have the external range context that price wants to make a move down, you're not seeing this buy side sweep in these wicks here and going, oh, like I'm gonna get in here. You're waiting to see whether price wants to continue down because this could just be a market structure shift, right? So you're waiting to see whether there's a further displacement, and then you're getting in where? At the displacement. So we could have got an entry at 65,321. The fair value gap was 65,134. Your targets would have been these equal lows, and we smashed them. Hopefully that makes sense. And this is why patience is a virtue. This is why don't guess. Don't feel FOMO. Because this shit can happen. This shit can happen on a 1 minute time frame. You can scalp price action like this. It happens. Look right here. What do you see here? Buy side liquidity followed by displacement, right? Exactly. Yup, exactly right. What was here following the displacement? Fair value gap. That could have been your entry point. You're then targeting previous lows. This is where you crank up the leverage to 100x or fucking whatever you want. But these are the setups that you're using high leverage in. Because obviously you're getting an entry in at 71,310 and looking for 71,100. But it still happens on all time frames. What happens after this initial entry? Further energy to the downside. What does that form? A fair value gap. Exactly. Taps up. Further downside. What do you see here? Internal range buy side sweep into what? Fair value. There's no confirmation of trend shift here. This is a potential area. Oh, we're getting some weird feedback. This is a potential area of trend shift on a 1 minute time frame anyway. Because what happened here? Sell side sweep followed by displacement to the upside. Where would you look to get in? At the fair value gap after trend shift. Pull your fibs from low to high. Where's the 0.62 line up? Where's your optimal trade entry line up? Hell yeah. Where does the bottom line up? Complete mitigation of that fair value gap. Where is it? At a range discount. So you can scalp this too. You could scalp long. But I'm just trying to show you that this happens on every single time frame. And if you can catch moves like this on on a higher time frame, if you catch,
我老婆，没有打包绿豆水给你，然后
who the
他们
fuck
什
is
么那
that?
个
I just muted him. Um, if you can catch these moves on a higher time frame, you are going to make good money. If you catch a buy side sweep followed by displacement, so if you catch the beginning of a sell program, so we see a buy side sweep followed by displacement on a 4 hour or even a fucking daily, whatever you want. We might see a fair value gap or a break or the breaker block, right? Lining up with the fair value gap. We pull fibs from here to here. We consolidate and we break up into this point of interest into a premium after we take. This could be a significant high, right? This is why I'm interested in. Oh, you motherfucker! I just got rid of my indicators. Control C that bitch. Yeah, sweet. This is why. This is why I'm interested in seeing what price does once it sweeps these highs. Because we might get a buy side. These are significant highs, right? This is a lot of built up liquidity. This is what, 1, 2, 3, 4, however many days, like fucking since 8th of April to now, of built up liquidity. People will have stops resting there. Swing traders will have stops resting there. Bears will have stops resting there. You might see a scenario where price sweeps this high and makes a display. Oh Jesus Christ! Makes a displacement move, right? It's telling you that big boys are now taking profits. If you catch this move and simply just look to get in on the retracement and a fair value gap retest and or break a block retest, etc., and you ride it all the way down to lows, you're making big coin on that. Exactly, man. Exactly. So, like, but yeah, you can use these concepts on every time frame. So this to me, these are relative equal highs. That's not a sell side. That's not a buy side sweep to me. That's a relative equal high. Um, what is this? What is this leg in liquidity in in the model that we trade? That's engineered liquidity, right? People are seeing this as support and resistance. So what I'm waiting for is this, and then our ultimate target for the scalp would be this high, and then we're looking for an entry at a range discount after this is the defined trend. So I hope that makes some sense. Um, I'm gonna jump off now anyway. This turned more into an educational session as every session seems to turn into, which is fine. I want you guys to learn. So um, I I'm going to no, all good, Roy, all good, bro. I'm gonna do either a live scalping session on Friday or just simply chart requests, and we can end it on a live scalping session. I want to have a quick look at some charts before I go to bed tonight, and hopefully might be able to find some setups because it looks like we're seeing some form of retracement right now. Yeah, Rabbit. Oh, I'm glad you like it, man. And hopefully this like opens your eyes about how price moves. Get support resistance, get wedgies and fucking head and shoulders out of your head because that's not what's actually going on. Um, oh, I'm Aussie, so I actually live on the Gold Coast. Awesome, Nick, man. I'm glad, bro. Um, I'm very appreciative of you as well, so I'm glad I could help in some way. Also, mate, how do you practice finding out all these FVG? Um, they're very easy to find. But not if every fair value gap matters. All right. I don't want you guys to start framing every setup with just using fair value gaps because not every single one's significant. Um, yeah, it's what do you see here? So between this wick and this wick, so this between this wick and the subsequent wick after it, that's a fair value gap. The body in between those two wicks, the body. And the reason why that's a fair value gap is because in between this energetic move, buyers or traders, institutions, big buyers were unable to get orders in within that move because there was too much energy, there was too much movement going on. So they look for a retracement back into this area of fair value, which has been untouched before potential continuation. Like I wouldn't bother. That's a fair value gap as well. It's fucking tiny, but why would you bother with something like that? It doesn't matter about the size. You can refine fair value gaps that small and use them as entry points, but there's no context to why you would use that fair value gap. There's no reason. It doesn't line up with anything else. There's no inverse fair value gap. There's no bearish order block around here. There's no breaker block around here to use. So it's insignificant. But yeah, just look for wicks with a large body. You're looking for energy. So if you see a candle that's like this, there's going to be wicks in between the subsequent price action with a fair value gap. There's going to be a body in between that in between this energetic move. There's going to be a fair value gap. So just start looking for them like that. Here, wick. Whoops. Wick. Shit. Sorry, dudes. Wick. Wick. Right? So price is trading within this fair value gap right now. This is why not every fair value gap is important because it might mitigate this, but what's it running into? There's no bullish order block. Well, there is, but it's not a significant bullish order block because it's simply one 4 hour candle. Yeah, so it's just simply one 4 hour candle, right? This fair value gap here is more significant to me. Why? Because we pulled fibs from this low to this high, and look how well the zero point 0.5 lines up with the beginning of the fair value gap. So the beginning of the fair value gap's here. Where do we look to be buyers? Below the zero point 0.5 at a range discount. Where are the first two entries within this fair value gap? We spoke about this already. The 0.62 lines up with the fair value gap equilibrium. So you've got confluence here that this fair value gap is significant. I wouldn't be considering this fair value gap as significant because it's at a range premium. There's nothing there. um, it should just simply be mitigated. This one is of significance because it's at a range discount. It lines up with optimal trade entry range. It lines up with a breaker block. So there's added confluence that this fair value gap is of significance. Alright. I'm gonna jump off anyway, homies. Yeah, I think I'm gonna set a Bitcoin alert actually for a long. We'll see how we go. Hope you guys got something out of this anyway. No worries at all. I've got to get some rest, so I'll work tomorrow. No worries, homies. I'm glad you got something out of it. Um, hit me up anytime if you got any questions. Um, DMs are always open. Hit me up in main chat, whatever you want to do. So no worries, no worries, dudes. Um, Glad you guys took the time to listen, and I hope you got something out of it. So um, I'll see you guys Friday anyway for another live stream. But anyway, have a good day or night, and good luck with it all. Have a good one.